Is Hong Kong stock market ready to flip? Is Hong Kong stock market's headline index, Seng, is ready to offer great investment opportunity for a long term after a very long term downtrend in the market? The bear market that started way back in February 2018 lasted for nearly 5 years. There was a massive drawdown of 56.41% from the peak it has made in 2018. The Hong Kong economy continued to record the moderate growth in the second quarter of 2024 with a real GDP increased by 3.3% on year-on-year basis, after a 2.8% growth recorded in the first quarter. The government has given a forecast for a growth of 2.5% to 3.5% in real terms in 2024. So what is next in the Hong Kong market? So in this video, we will undertake the comprehensive analysis of Hang Seng Index and we'll check the valuation, the potential earning growth forecast, and price action by performing the multi-timeframe technical analysis on the price chart of Hang Seng Index. Friends, do not forget to like this video, subscribe the channel for more such analytical videos in the stock market, and don't forget to hit the notification bell. Let's begin. Let us first check the Hong Kong market valuation. This is on the basis of the aggregated company financials. There are about 2,293 companies which have been considered to arrive at the valuation at the current market price. Now, if we look at the market valuation, the current PE ratio, price to earning ratio, is 11. And if we check the 3 years average, it stands at 10.9, which means the valuation is looking good. Now, if we check the price to sales ratio, another value metric. So price to sales ratio is currently at 0.9 and 3 years average is 0.9. So it is not only less than 2, but also at par with the 3 years average of the Hong Kong market. So broadly, the valuation is looking good. Now let us check the growth forecast for the Hong Kong market, that is Hang Seng Index. In order to understand the growth, we'll focus on the various sectors of the Hong Kong stock market. Now let us check the broader market. We have checked the current P ratio is 11 and the earning growth forecast is 11.8, which further confirms that the valuation is good because growth is higher than the P ratio. So if we arrive at the price to earning to growth ratio, that is PEG ratio, it will be less than 1. So the valuation is looking good. Let us focus on the top sectors. Tech sector is likely to post an earning growth of 25.2%, while healthcare industry is likely to post a growth of 27.9%. And another sector is material, which is likely to post a growth of 21.9%. So these are the primarily 3 sectors which are likely to grow in terms of earning by more than 20%. But we cannot ignore 2 more sectors. Why? I'm telling you. There is one sector, industrials. Why this is important? Its P ratio is 9.9, while earning is likely to grow at 14.3%, and hence PEG ratio would be less than 1. So it is looking good in terms of valuation. Another sector is financials. Its current P ratio is 6.4 and earning is likely to grow at 8.1%. So these are the top 5 sectors where we should keep focus in the Hong Kong stock market. Now let us move to the price chart to undertake the multiple time frame technical analysis. Friends, do not forget to like this video. This is the monthly price chart of Seng index. The index currently is trading at 18,985, and I'm doing this analysis during the live market of 24th September 2021. Recent time it has made an all-time high over here, and then there was a very big bear market that started. The bear market that started in 2018 was unique in itself. There are two reasons why I'm saying so, that this stock market, bear market, was unique. Because for the first time during the bear market, Hang Seng index spent time, majority of the time, below simple moving average 200. Although it had taken a support over here, but ultimately it formed the double top and there was a breakdown, and since then it is trading below simple moving average 200. If you look at the prior bear markets, like in 2007, 2008, it took support at SMA 200 and then recovered. If you look at another bear market of year 2000, it again took support at SMA 200 and then recovered and gave a phenomenal return. But this bear market was a little different. It made an all-time high of 33,484.08. It was an all-time high it made in January 2018 over here, which was higher than the earlier all-time high. So practically speaking, this was a breakout on the closing basis. But unfortunately, the high of this candle was 33,484.8, and there was no follow-through subsequently, and the bear market started in February 2018. The market structure turned lower highs and lower lows. There was almost a vertical fall over here. And then what has happened? It stopped making lower lows. In the process, it has made a recent low of 14,597.39. So this was a drawdown of little over 56%, which was a major drawdown. Now what is happening here is, if you check here, it is a double bottom kind of formation. But the apex of the double bottom is here. So in a long-term chart, still the trend reversal is not indicated. But one thing is good, that during this correction, the price did not go below the recent low it has made at 14,597. And now the price after retracement is recovering. So this is a positive sign. And past 3 months, the prices created a base at around 17,000 level, which is very, very significant. Now let us move to the weekly price chart to understand the price action further. What we can see in the weekly price chart. In weekly price chart, if you look at this trend line, price has taken support here, price has taken support here. So it is making a higher lows kind of a structure, indicating that the bulls are well under control. We need to have a reversal chart pattern after a massive downtrending move to have a confirmation that the trend is changing or trend is reversing from bear to bull market. Now here what we see in weekly price chart, if we draw this trend line, price has taken resistance here, price has taken resistance here. So if it gives a breakout above this trend line, where this trend line will act as a resistance. At the same time, it has a confluence of simple moving average 144 period. But if it gives a breakout of this could be potentially a reversal chart pattern. This is a left shoulder, this is a head formation, and this is a right shoulder, which might push the price to higher level. Now, if we calculate the target on the basis of this upcoming inverse head and shoulder, presuming that it will give a breakout, what target comes? Target comes at 22,695. Let us round it off to 22,700. But that becomes the apex where the price has earlier taken resistance. It was a support over here. It was a support over here. To 22,700 is likely to give a good resistance to this index during the upside move. But once the price start trading above 22,700 level, which is primarily the first target of this upcoming inverse head and shoulder, then probably there will be major breakout of double bottom chart pattern. Bottom number one, bottom number two. If the price gives a breakout of this apex, let me tell you the precise apex. Precise apex is 22,700.85. So we need to have a closing above 22,701, which will confirm the trend reversal if that breakout candle high is given a follow through on upside. Then there will be significant upside momentum developing in Hang Seng Index. Now let us go to the daily price chart to understand the recent price action and do the trend analysis of this index. What has happened? Till this point, it was making lower highs and lower lows kind of market structure. Here the price got stabilized, and can we see the reversal chart pattern? So I will draw. If you are a beginner in the stock market, you will understand the chart pattern as also. This is the left shoulder, price went up, it formed the head, and then it gave a breakout of a inverse head and shoulder, left shoulder, head, right shoulder. There was a breakout of inverse head and shoulder, indicating on 25th of April 2024 that trend reversal has been confirmed. What is subsequently happened? There was a golden cross over here. EMA 55 crossed over SMA 200. However, the international definition of golden cross is SMA 50 crossing over SMA 200. But we follow EMA 55 and SMA 200 and SMA 233 to understand the price action. Now, what has happened in the recent time? Again, there was a deeper correction. Price almost took support at neckline of this inverse head and shoulder. So it was a throwback to the neckline, which is quite normal. Majority of the time it happens. And now once again, the market structure is higher highs and higher lows. So this index has become bullish. Now, if you see, there is a several moving averages, EMA 21, EMA 55, and SMA 144, all are meeting, converging at a single point, showing the strength in the market. So this index is looking good in terms of return, because after a long 5 years of bear market, the trend reversal is taking place. Now, what has happened here? You should understand. This was the inverse head and shoulder that I have explained. It has attained the target of this, and this correction started after that. But during correction, intermediate trend and long-term trend remained bullish. However, there was a short-term trend which became bearish, but this can be considered as a typical complex correction in the market. So overall trend is bullish. And if I again go back to the weekly price chart to understand that if it gives a breakout of a double bottom, which is lying at 22,701, what could be the potential target? So I am calculating this in anticipation of the breakout of double bottom chart pattern. So first target would be 29,600 and then 34,866. So all the targets of chart patterns are considered minimum expected objective. The best way in the stock market to participate is to follow the trend, to ride the trend and trail the stop loss as the price action emerges. So do you think, friend, that the trend reversal has taken place in Hang Seng Index? And if you agree with my opinion, I would like you to offer your comments in the comment section of this video. Thank you for watching. Looking forward to meet you very, very soon.